Hi, welcome back to the channel. In today's episode, I want to talk about another major escalation in the war in Iran because over the last 24 hours, we've seen tensions between Iran and the United States rise significantly. The Americans have accused Iran of shooting down one of their military helicopters near the Strait of Hormuz. The US has responded with strikes against Iranian military targets, and Iran has now launched attacks against American military facilities across the whole of the Middle East. And that's important because every step in this process moves the conflict further away from de-escalation and closer towards a wider regional conflict. At the same time, financial markets are becoming increasingly nervous. Oil remains above $90 per barrel. Technology shares have continued to sell off. Bond yields are still rising. And some of the world's largest financial institutions are now openly warning that risks are building across the global economy. So in today's video, I want to go through exactly what's happened with the helicopter incident, what we know about the American response, how Iran has retaliated, what could happen next, and why investors around the world are paying such close attention to these developments. But before we get started, could I ask anybody that hasn't subscribed yet to please hit that subscribe button and also give me a thumbs up. Really does help me with the channel and also puts a smile on my face. And just a quick reminder that my competition where you can win my property or a cash alternative prize closes this Friday, the 12th of June at 5 p.m. UK time, which is midday New York and 9 a.m. Los Angeles. So if you haven't got involved yet and you're interested in it, scan the QR code on the screen now or click the link in the description below. And good luck in the draw if you're getting involved. Now let's start with the event that appears to have triggered the latest escalation. According to statements from Donald Trump and senior US officials, Iran was responsible for bringing down a US Apache helicopter operating near the Strait of Hormuz. The aircraft was repeatedly conducting operations in one of the most strategically important waterways in the world. The Strait of Hormuz is around 20 miles wide at its narrowest point and acts as the gateway between the Persian Gulf and the open ocean. A significant proportion of global oil exports pass through that route on a single day. It would be around 20% if it was operating normally, but as you'll know if you've been following the channel, it isn't operating anywhere near normally at the moment. So anything that threatens stability in this area immediately attracts the attention of governments, energy traders and investors. The details of how the helicopter was brought down are still emerging. However, the US position is clear. Washington believes Iranian forces were responsible. It was reported that a drone hit the copter. Both pilots managed to eject before the aircraft crashed, and thankfully neither was killed. And what happened next is particularly interesting because it provides another glimpse into how modern warfare is changing. The rescue operation involved the use of unmanned naval drones. For years we've associated drones with surveillance missions, reconnaissance operations and more recently attack roles. Now we're seeing them being used in rescue and recovery situations as well. Technology continues to play an increasingly important role on the battlefield, and this incident highlights just how rapidly military capabilities are evolving. The political response from Washington was swift. Donald Trump publicly blamed Iran for the attack and stated that the United States would respond. The message coming from the White House was that American forces could not allow an attack on US military personnel to go unanswered. And that brings us to the next stage of this story. Within hours, US forces launched strikes against multiple Iranian targets. Reports suggest that close to 20 sites were targeted. The focus appears to have been on military infrastructure, including radar systems, air defense facilities, and positions linked to Iranian operations around the Gulf region. The US described the strikes as a measured response in self-defense. The objective was to degrade Iran's military capabilities while avoiding a broader campaign. But history shows that retaliatory actions rarely bring an immediate end to tensions. Instead, they often create pressure for another response. And that's exactly what appears to have happened. Iran subsequently announced attacks against American facilities across the Middle East. Reports indicate that US-linked sites in Jordan, Bahrain and Kuwait, as well as some other locations, were targeted. Air defense systems were activated across the region. Interceptions were reported by the USA, military bases were placed on heightened alert, and suddenly the conflict had expanded beyond the original helicopter incident. The concern now is what comes next, because we're witnessing a familiar pattern. One side acts, the other side responds. That response creates pressure for another reaction, and each new step increases the risk of miscalculation. Nobody can say with certainty whether this latest exchange represents the peak of the escalation or merely another stage in a much larger confrontation. What we do know is that markets are becoming increasingly uncomfortable, and that's where this story starts to move beyond geopolitics into economics. Investors were already nervous before this latest incident. Over recent trading sessions, we've seen a significant correction in technology stocks. The Nasdaq has fallen sharply from its recent highs. Semiconductor companies have been amongst the biggest casualties. Some of the most heavily owned AI-related stocks have also come under pressure. After months of extraordinary gains, many investors had already started questioning whether valuations had become too stretched. Now they've been handed another source of uncertainty. The result has been a move away from risk. Money has started moving out of some of the highest growth sectors and into more defensive positions. The mood has changed considerably. Just a few weeks ago, the dominant conversation was about AI, growth projections, and record market highs. Today, the discussion is increasingly focused on geopolitics, inflation, and risk management. One of the most striking developments over the last few days has come from Wall Street itself. Bank of America has issued a warning that it describes as too many red flags appearing across financial markets. Its strategists have highlighted a growing number of indicators that historically have been associated with major market peaks. In fact, they estimate that around 70% of their bear market warning signals are now flashing caution. That's not the sort of language that investors hear every day. When one of the world's largest financial institutions starts advising clients to take profits and exercise greater caution, people tend to pay attention. And then we come on to oil. Oil prices remain above $90 per barrel. What's remarkable about that is how long they've been at that level. We've now spent more than 3 months above $90. At the beginning of this year, oil was trading at around $60. So we're looking at an increase of more than 50% in a short space of time. Now that is a huge move. And this isn't being driven by increased demand because of a growing economy. It's being as a result of the shortage in supply. And energy sits at the heart of modern economies. When energy costs rise, the effects eventually spread into transportation, manufacturing, logistics, agriculture, and ultimately consumer prices. Businesses face higher operating costs, therefore consumers will pay higher bills. Inflation then becomes much more difficult to control, and central banks find themselves dealing with a much more complicated situation today. At the same time, government borrowing costs, which relate to bonds, are moving higher. Bond yields have risen dramatically over recent months, and that increases the cost of financing deficits. It increases the cost of refinancing old debt and creates additional pressure on economies that were already carrying high levels of historic debt. What's particularly interesting at the moment is that gold hasn't behaved in the way many people expected. Normally, periods of geopolitical uncertainty produce a rush into traditional safe haven assets. Instead, we've seen gold prices soften. That suggests investors are still trying to work out exactly where the safest place for their money is right now. In other words, there is uncertainty everywhere you look. Higher oil prices, rising bond yields, a correction in technology stocks, warnings coming from major financial institutions, and now another escalation in the most important geopolitical flashpoint in the world right now. Individually, each one of those developments would attract attention, but when you put them all together, they paint a very concerning picture. The challenge for policymakers is that many of these issues are interconnected. Higher oil prices fuel inflation, higher inflation keeps interest rates elevated, higher rates place pressure on borrowers, businesses, and also governments, and slower growth then starts to impact corporate earnings and investor confidence. That chain reaction is precisely what markets are worried about. The reality is the global economy entered this year in a relatively strong position. Growth was holding up really well, employment was resilient, consumers were still spending, but economic resilience can be eroded surprisingly quickly when multiple pressures begin arriving at the same time. And that's why investors are paying such close attention to developments in the Middle East. this isn't just a story about war. This is an energy story, it's an inflation story, an interest rate story, and ultimately a global economic story. The next few days are likely to be critical. Investors will be watching for signs of further military escalation. They'll be watching oil prices, they'll be watching the bond markets, and they'll be watching to see whether the recent weakness in technology stocks develops into something more significant. Because if this conflict continues to escalate, the economic consequences will be more severe. Hopefully, cooler heads will prevail and everything will calm down, and diplomacy starts to gain traction. But the situation at the moment, the direction of travel appears to be moving in the wrong way. And that's why financial markets around the world are becoming increasingly concerned. So I'll keep you posted on any further news and developments, but hopefully you found today's episode useful, informative, and most importantly, thought-provoking. If you've liked what I've said, or maybe you didn't quite like it, but you thought it was interesting, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already.